Welcome back to the Catalyst Clock. Quick note, not financial advice, we're not licensed advisors, this is educational analysis only. A company that's still losing money on every single thing it sells just became one of the most talked about stocks in tech this month.
Right, Rigetti Computing swung up 7 to 9% on 3 separate days in the past 2 weeks alone, even while the broader quantum computing sector was getting hammered. That's not normal behavior for a stock this small.
So what's actually driving it? Let's dig in. Start with what this company actually is. Rigetti builds quantum computers, the superconducting kind, and sells access to them through the cloud.
Revenue grew almost 199% year-over-year last quarter. Sounds massive, but keep the scale honest. Analysts expect just over $5 million in revenue this quarter, up from $1.8 million. That's still a tiny business by any normal measure.
What is genuinely strong is the balance sheet. Rigetti sitting on roughly $569 million in cash. For a company still losing money, that's a long runway. They're not scrambling for survival funding anytime soon.
Here's where it gets interesting. Rigetti signed a letter of intent with the Department of Commerce for up to $100 million to help scale superconducting quantum computers.
And 2 separate executive orders just pushed federal systems toward post-quantum cryptography by 2030, plus a mandate for a research-grade quantum computer by 2028. Translation: the government just created years of guaranteed demand for exactly the kind of hardware Rigetti builds.
On top of that, they're expanding their partnership with HPE and the Pittsburgh Supercomputing Center to build a new hybrid quantum classical supercomputer, backed by a grant from the National Science Foundation. They're also part of DARPA's quantum benchmarking initiative. That's real federal validation, not just a press release.
Now, the price action here is not for the faint of heart. This stock ran from around $18 in late June, pushed toward $19, and then gave back over 40% of that in a matter of weeks.
And that drop wasn't really about Rigetti specifically. The entire quantum computing sector pulled back double digits over the same stretch, as investors got nervous about how much money is being poured into AI and quantum infrastructure broadly. This is macro caution, not a company-specific red flag.
Even after the pullback, the average analyst price target sits around $31, more than double where the stock trades today. Some targets go as high as $40, others as low as $27. Nobody's pretending this is a settled story.
So where does that leave us? Real government backing, a genuinely long cash runway, but still losing money on a tiny revenue base, in one of the most violently traded corners of the market.
I'd call this a 5 out of 10. This isn't an investment case built on current earnings. There aren't any. It's a bet that quantum computing becomes commercially real over the next several years, and that Rigetti stays one of the government's preferred partners when it does. That could genuinely pay off. It could also just as easily go the other way if execution slips or the sector's spending appetite cools further.
Q2 earnings land August 6th, that's the next real checkpoint. Until then, this is a stock you size carefully, not one you chase on a green day.